Hello all, Tony here. Well, US equity markets finished lower on Friday after a session of extreme volatility triggered by President Trump's nomination of Kevin Warsh to succeed Jerome Powell as Fed chair. It remains to be seen how Kevin Warsh's traditionally hawkish leanings evolve as the new Fed chair, but at least initially he's expected to advocate for lower rates in line with President Trump's wishes. Looking ahead, this week features another busy quarter four earnings slate, including reports from AMD, Alphabet, Qualcomm, and also Amazon. On the economic front, the key domestic event is the January non-farm payrolls report, which we are expecting to see the unemployment rate stay at 4.4% there in the US. Let's take a look at the charts of the S&P 500 and the NASDAQ to see how they look at the start of this new week. Right, so this week we're starting with the NASDAQ on the weekly time frame. And the reason for that is there's been a couple of interesting developments which are better highlighted on the bigger time frames. The first one is we have the potential double top forming here up around 26,180. As you can see that it fell just short of that high last week before closing lower, which has also left another loss of momentum weekly candle. Now, these weekly candles, when you see a loss of momentum candle, can be very useful. They are the setup, they're not the trigger. The final thing I want to highlight on the NASDAQ on the weekly time frame is the fact that you can see here we didn't break above this high from October, and this then will bring me to a point which I'm about to make about divergence when we look at the S&P chart. Before we do that, I want to look at what the trigger would be for a downside move in the NASDAQ to start to gain some momentum. We've seen a couple of false breaks lower, just hasn't evolved. This time we're looking for potentially a break below this 25,200 support level drawn from this low back in November. That would be an initial sign that potentially we're seeing some downside follow through. We've had one or two nights previously, but there just hasn't been that consecutive push lower. So the first thing for us, we're watching for a break below support at 25,200. Now, if that was followed by a break below this low we saw on the 20th of January, I think it starts to really firm up the idea that we have seen a double top here and here, potentially a failed Elliott Wave fifth for anyone that follows Elliott Wave, and that we're coming back down towards this medium-term support area around 24,000. Now, we need to see those levels break, because if they don't, it keeps the NASDAQ in an uptrend, and we can't rule out a break at the double top and a push up towards 27,000. Now, tuning in on the S&P 500, you can see a fresh record high last week. Again, the NASDAQ, which is the high beta indice, which should be the leader, just hasn't been able to confirm it for many, many weeks now. Even over here, the S&P made a new high, but the NASDAQ didn't. Builds up this idea that potentially we're seeing some intra-indice divergence, if you like, often a good signs of topping. Now, these tops take time to play out. We've spoken about we need to be a little bit patient. We need to see some downside follow through here. But it also does warn us that we don't really want to be chasing the rally at this point of time. So the downside follow through I'd be looking for would be a break below uptrend support, currently around 68.50-ish, and then below this 67.89 low. And if we were to see a sustained break below there, then I think it confirms a lot of things we've been talking about, that potentially we're looking to top out here. This would be a completed Elliott Wave 5-wave advance going back to this Liberation Day low back in April, and that we're seeing a deeper pullback into this 6,500 to 6,520 support area. Conversely, it holds above this uptrend support and then breaks above 7,000. Well, we would then have to look at where that projects with regards to this trend channel, and it's up around 71.50 currently. That's all for this market update. Stay tuned for more ahead.